It's Tuesday, September 17th, and this is Markets Daily, hosted by me, Jen Sanasie. On this show, we navigate the currents shaping the crypto markets, providing insights against the broader financial landscape. So, whether you're actively trading or simply fascinated by the volatility that is the crypto markets, this show is your compass to understanding what's happened, where we are, and where we are going. Good morning, everyone. Happy Tuesday. Today, we're talking about a company that recently adopted MicroStrategy's playbook of buying Bitcoin on the open market. What company is that, you might ask? Cathedra Bitcoin announced that it will pivot away from Bitcoin mining to providing general data center services and buying Bitcoin on the open market. The soon to be former miners cited unpredictable profit margins as the cause for the shift. Here's the scoop. They've decided to take a page out of the MicroStrategy playbook by purchasing Bitcoin directly. Now, for those who are unfamiliar with what's happening over at MicroStrategy, former CEO Michael Saylor began buying and holding Bitcoin as a primary strategy while he was in the role as CEO, and the company continues to do that even though he's executive chairman now. They've become something of a poster child for this approach, seeing it as a way to leverage their company's capital into what they see as a future-proof asset. So, why does this matter? Why are we talking about it today on Markets Daily? Well, the once seemingly kooky plan is catching on, and I think that's really important. One of the biggest Bitcoin mining firms, Marathon Digital, adopted this very same strategy, and now Cathedra is following suit. Now, Marathon and Cathedra's moves highlight a growing trend in this space. Traditionally, miners would mine Bitcoin and sell it to cover operational costs. But as mining becomes more difficult and more expensive, they are diversifying by accumulating Bitcoin. These companies are betting on its long term value and stability. It's a signal of confidence in Bitcoin's future and an endorsement of its potential as a store of value. Hey everyone, did you know 52 million Americans own cryptocurrencies? That's not just a number, it's a movement, economic, social, and political. Decentralized finance, blockchain, and digital currencies are more than buzzwords, they are the future. This November, it's on us to show up and step up. We need to protect crypto to ensure it continues to fuel innovation and freedom for our families and businesses. Don't let this opportunity slip by. The future of crypto is on the line. Make your voice heard this November and pledge to vote now at standwithcrypto.org/pledge. Now, let's break this down even further. When significant players like these buy Bitcoin, it can have a couple of effects. First, it can increase demand, potentially driving the price up. This is particularly notable in a market where institutional interest continues to grow. Secondly, it signals to other investors and companies that Bitcoin is not just a speculative asset, but a serious component of a balanced portfolio. But it's not just about the price or investment strategies. This move reflects a broader acceptance and institutionalization of Bitcoin. As more companies adopt this approach, Bitcoin's credibility as a legitimate asset class strengthens. It becomes less of a niche investment and more of a staple in the financial world. And that, my friends, could lead to more mainstream adoption and innovation. So, what does this mean for you? Whether you're a seasoned crypto trader or just dipping your toes in the crypto waters, it means that this market is maturing. The strategies that might have seemed radical a few years ago are becoming normal. Companies are not only participating in the market, but actively shaping its future, and that could create new opportunities and challenges for absolutely everyone involved. The real story here is how their shift towards buying and holding Bitcoin signals a seismic shift in the crypto market's power dynamics. When major miners start stacking up Bitcoin rather than selling it off, they're not just betting on the asset, they're redefining it. By accumulating Bitcoin, these miners are effectively giving a vote of confidence to its long term value, challenging the perception of crypto as a speculative bubble. They're making a case that Bitcoin isn't just a digital commodity, it's becoming a cornerstone of serious financial strategies. So, why does this matter? For one, it can increase Bitcoin's scarcity on the market, potentially driving up its value. More importantly, it's a statement that Bitcoin is here to stay. The traditional financial world is watching. And as more players like Marathon and Cathedra adopt similar strategies, we could see a new era of Bitcoin acceptance. The crypto market might not just be about trading anymore, it's about strategic asset accumulation and long term investment. This shift could be the catalyst for a broader mainstream embrace of Bitcoin, one where it's not just a wild card, but a critical piece of the global financial puzzle. That's it for today's show. Thank you so much for watching and coming on this journey with me to better understand the crypto markets. If you love this show, subscribe to the CoinDesk Podcast Network. That is available on all podcast platforms. We are also on YouTube. So hit that subscribe button, give this video a thumbs up. Let us know what you think of the show, good or bad. We read the comments. We will try and fix things so that you keep coming back every single episode. I'm Jen Sanasie. Thanks for listening. Thanks for watching, and we'll see you tomorrow.